December 26th, 2025. Let's see how many times the strategy came into effect today. We've got our pre-market levels. All of the lows are always going to be red, I think, from here on out. And then all of the recent highs will be different shades of blue. And we had an interesting open because on our daily, what we do first is we look at the daily momentum. What's going on a daily level? This is the momentum indicator for a daily chart. And you'll know, it's obvious. You don't have to, this is so straightforward. This adds to our bias. We just take that into account. And then we go about the day and we allow the 30-minute MACD energy and the 5-minute MACD energy to align. And once those alignments happen, you get what's called edge. And that's called momentum stacking. We're going to momentum stack right now. Look at this. Off the open, we had the two 5-minute data sets, the non-extended hours, just regular hours, and the extended hours. They're already in sync right as the market opens. So that's really good. Our 30-minute is acting like it's going up right at the market open. And you'll notice, before we even go forward, look what happened today. Nothing happened today. Yes, you can capitalize off of these moves, but in terms of the market, we basically did nothing today. You know what I mean? Just a consolidation day. So we come up on this pre-market high, and then we get rejected. And by the time this is happening, because of our 5-minute charts, we're looking for upward moves. We're looking for upward opportunities. And then we need permission from the 2-minute MACD to match and align with this. And that does not happen. When these are telling us to look for upward opportunities, we don't get a volume confluence on the right side of the momentum. So we sell off. These 5-minute now are flipped to the downside. So at this moment, we are now looking for downside opportunities as soon as this flip happens. As soon as that flip happens, we're looking for downward opportunities. On this red line, you could have taken a trade because it was a volume confluence on the right side of the momentum. Your entry would have been here at the close of the candle. Then you would have put your stop loss somewhere above that candle. I usually, sometimes I'll use the previous candle to judge. And then you would target either a 2-to-1 or a 1-to-1. And you can already tell. This would have been a loss with a full 1-to-1 ratio. We would not have hit the profit target. But a 2-to-1 actually would have won. Taking partials is important as it makes its way to your target. If you can take partials, that's a wonderful thing to be able to do. But this would have been considered a loss if you would have gone for a full 2-to-1. Or a win. It was too close to call, so we'll call it a loss. And then I did not take this trade, obviously. If it was a trade I took, it would be yellow. Here's a trade I took because there's a yellow line right here. We were on the right side of this momentum. The momentum on the 5-minute had not flipped over yet, so this is what you call a risky trade. But the momentum's going with me. The 30-minute at this point is just kind of heading downward. This volume bar was so big that I decided, I'll risk a little bit and go for it. So I set my stop loss, not at this candle because this candle is so tiny. I used the previous candle for my stop loss. And then I targeted basically a 2-to-1, a little bit more than a 2-to-1. Hit that target and took further profits up here. That was a good win. What happened here? These are just me giving some marks. And then the other trade I took today was right here in the middle of I never do this. I never take trades in the middle of the market. But today I did because something told me to do it. I don't know what it was. Look what happens. The 5-minute has worked all the way back up, had a slight breathing, had a slight relaxation, started to come back up again. We have this nice symmetry. We've got a volume bar greater than the previous 3. So entry was at the close of the candle. Stop loss was slightly below it. My first target hit. These were good trades. These were wonderful wins today. Anytime you see a blue or a red line that's just trades that I would have taken, but I didn't. There was one last trade I took, which was right as we were getting close to the end, last 10 minutes of the day, which is always my favorite. As we were getting close to the end, this was building downward momentum. I could see it that it was building downward momentum. And sure enough, right here on this fat bar right here, look at this volume confluence. This is right at the start of the last 10 minutes of the day. Things were lining up for it because the 5-minute was already primed for it. What has the 30-minute been telling us all day? Downward bias. So all in all, this trade was a good win. This was a wonderful win. Entry was here at this candle, targeted a slight 2-to-1 over here, and got even more. I used partials. You don't just. Everybody's different. I'm not just getting in and out in full chunks. I like to use partials and sell a little bit on the way, sell a little bit at the full target, hold on to a little bit in case it keeps running. All in all, it was 3 trades today that I took, all of them being wins. One last thing I wanted to talk about was this thing right here. You're going to notice a red and blue at the same place. Okay. We were on this side of the 2-minute momentum, and I thought it was going to go up for a second because this was green. This was actually there was some crazy volatile stuff going on here. And it's just so funny how the day can consolidate sometimes. Look at this 5-minute. We had an upward bias, right? We were thinking this was going to continue up from here. That's why I put the blue line. I thought this was going to continue upward, bounce off of VWAP. But it didn't. And it just goes to show how unpredictable things can be, because this was green until the last 10 seconds. This volume bar was green. This MACD histogram bar was up here, higher than this one. And then in the last 10 seconds, so much happened, and it flipped all the way back down, finished here. It was so unpredictable. This MACD bar also was up here temporarily. So it's just crazy. It's all so wild. It's all probabilities. And unless you're... So for example, if you've got $1,000 in an account, the old rule is, mathematically, if you want to follow what mathematics tells you, you shouldn't be risking more than 1 to 2% of your account on any one trade. So if you've got $1,000 in your account, that means you shouldn't be risking more than $10 to $20, because that's 1 to 2%. Think about that for a second. So if you're trading whatever you're trading, if you always are trading about 1% of your account as your maximum risk, you'll be safe no matter what you do. Because even if you mess up and you have a bad week or a bad streak or whatever, as long as you're only risking 1 to 2%, you mathematically will have enough time for recovery. And if you're trading a system that has edge, that edge will manifest. It's just a matter of repetition, of systematic process following, of faith, discipline. I'll see you in the next one. I hope you have a good one. Take care now.